Tariffs were announced in an unprecedented manner. The shakeup is happening to almost the pillar of the global economy. Bond market is actually multiple times larger than the equity market.
What made US President Donald Trump pause his most aggressive tariff plan? It wasn't the US stock markets crashing. It wasn't recession fears. Something unusual happened in the US bond market. A major sell-off that nobody, not even the most powerful man, expected. And that's exactly what we're breaking down in this episode of Cut the Noise. To unpack the bond market shakeup, I'm joined by someone who lives and breathes in this space, Nikhil Aggarwal, founder and CEO of Grip. Thank you for joining us, Nikhil.
My pleasure.
Getting straight to the point, Nikhil, what makes the bond market so important?
Many people don't realize how large the bond market is, but the bond market is actually multiple times larger than the equity market. The bond market today is about $130 trillion of bonds that are issued or outstanding across the world.
Yeah.
And a very large chunk of this is issued in the US and belongs to the US government. So the US government has issued bonds as a way of raising money.
And also the fact that US bond markets are considered one of the safest assets in the economy, right?
Yeah.
When markets are volatile, people rush to the US bond markets.
So US bond market, for a variety of reasons, has been considered the safest bond market in the world.
Yeah.
All countries across the world hold large deposits of the US Treasury bills or the US government bonds in their hands. Investors, whenever there is any amount of uncertainty, flock to the US Treasury almost in the same way as people think about going to gold. And hence the shakeup that's happened is so much more important because this is happening to almost the pillar of the global economy and what people consider to be safe.
How have Trump's tariffs impacted the bond market?
Imagine if there is a little bit of uncertainty that creeps into the economy in the US,
Right.
or for that matter, a world economy, the bond markets will react to that. Investors will wonder what may happen to bond payments, to bond interest rates. And when that gets done in the way it happened the last few weeks, where tariffs were announced in an unprecedented manner overnight and then also removed, increased for China,
Yeah.
it was very natural for some shakeup to happen. I think the bond markets, by their nature, are like to be stable markets. Let me just to put some fundamentals in place. Every bond is measured in yield, and the yield is higher means that the price of the bond is lower, right? So the yield is inversely proportional to the price. If people are expecting a higher return, they believe there is more risk. So what we saw happen was that the bond yields increased, which meant people saw or expected higher risk even in something like the US Treasury, and they started selling it, taking lower prices or demanding higher yields when they're buying it. Okay.
Okay.
This created, almost a 10% appreciation in yields for the bond from 4% to 4.5%, which in many ways, happens in the most exceptional of times.
Okay.
And this significant movement caused ripples across the world.
So, but why did this sell-off make Trump pause tariffs?
Yeah.
Yeah.
We started off by talking about how large this is. 130 trillion, 40% of which is in the US. I graduated in economics. So a lot of things I go back to saying what was the economic incentive of someone doing something. In this case, if the yields increased, that means the cost of borrowing for the US government has increased.
Right.
The US government will need to spend 10% more for borrowing money as compared to what it did earlier.
Yeah.
Now, as we already know, the US government is a heavily indebted government. The 10% increase will have a massive impact on the balance sheet and P&L for the US government. So this was the hard economics, but I think it also sent a signal, as a political president, you have to react to and you have to take actions then to bring calm into the market. The UK Prime Minister had one of the shortest tenures in history, I think 49 days as Prime Minister, because the bond yields in the UK became incredibly volatile. And that was one of the reasons she had to resign and move on from the prime ministership.
I want to also know from you, how does the US bond, what's happening in the US bond market, in fact, India's bond market?
So many investors are now global investors. They have the ability to freely move money across the world wherever they believe that they can get the best return for the risk that they have to take. If the US bond yields increase and the government of India bond yields remain the same, suddenly the Indian government bond yield is not so attractive. If you are an US investor, you're thinking, I'm getting, 1% less.
Yeah.
I'd rather just stick to the US because I have no currency risk.
Right.
If I invest in India, I'll get a little bit more, but I have currency risk to take. I have to also do more effort of moving money into India, moving money outside India, worrying about taxation. So the difference between the two yields can impact how much foreign money or foreign investor money comes into government bonds in India. This can have, like in economics and business, everything has ripple effects. If the government bonds in India do not see enough demand, they may see an increase in yield, which increase in yield could then push up interest in yield for all corporate bonds in India.
Yeah.
So these are the ripple effects that we will see. And it could also then make central banks like the Fed or the RBI take different kind of action to bring some of this in check.
Okay, very interesting insights there, Nikhil. The bond market may not make headlines like the stock market, but it quietly holds the power to shake governments, change government policies, and force even the most powerful leaders to change course. Thank you, Nikhil, for helping us cut through the noise. And if this episode helped you learn something new, drop us a comment and don't forget to subscribe to Grip's YouTube channel. Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.